Everybody, and welcome to the financial planning update for August 2021. We begin as usual with a review of the main market indices, and as we can see, August has been a broadly positive month for most of the major markets. The fortunes of the FTSE 100 really have reversed since the middle of the year. If we look back to the May to June period, you can see the FTSE 100, which is in the blue here, was actually pulling ahead quite substantially of some of the other major markets, but that position has now reversed itself and the US market is back in what you might say is its usual place at the top of the tree, largely driven by growth once again in US technology shares. So it's a very interesting story. Some people would say that these valuations are overdone, but there are many people who believe that the US technology companies still have plenty of room for growth. If we look at Amazon as a really great example, most of their profitability now comes from their cloud computing division. So although we picture Amazon as the trucks that sort of deliver our parcels each day, yes, that's a significant part of the overall operation, but it's not a huge profit driver. Most of Amazon's profitability comes from its cloud computing division, which provides services mostly business to business. And there's still a lot of growth in that area as companies continue to work online post-pandemic. There's also rumours that Apple is interested in breaking into the sort of business software market, very much like Amazon, Google and Microsoft have done very successfully. So once again, that could be a huge growth area for Apple as well. So while the growth in US technology shares is clearly very impressive, there are many people who believe that could well have further to go in the future as well. In terms of portfolio performance, again, all of the portfolios posting positive returns during August. These are the year-to-date figures for 2021. We can see here that the balanced portfolio now just approaching an 8% return for the year, which again is very much in line with expectations for a full calendar year. So we're very pleased with how the portfolios are holding up during what's been a very unusual period, but clearly one that's been fairly positive for markets. And we are now seeing a fairly consistent trend line. If we go back to sort of mid-May, early June time, since then really markets have been on a gentle upward trajectory. Now you might notice there's a little square on the graphs between June and July. That's when we made some fairly substantial asset allocation changes to the portfolio. So they're now starting to bed in, and really we're trying to position the portfolios for the post-pandemic world. And then finally, an area which I know a lot of people are always interested in is the comparison between the active and the passive variants of the portfolios. It's interesting actually, in the last month we've seen a little bit of a gap open, and the active portfolio is now outperforming the passive variant by around 0.5%, which is a fairly large divergence, given the two normally track each other very closely, as you can see. So some suggestion that active management has outperformed the sort of tracker funds over the last month or so. However, if we go back to the beginning on the left-hand side here, you'll notice there was a similar divergence in the opposite direction. So certainly nothing unusual in this, but just an interesting observation nonetheless. Now, the one major concern that markets have at the moment is around inflation. And there's an interesting conundrum on two fronts really when it comes to inflation. So the reason the markets are concerned about rising inflation numbers are that tends to then feed into rising interest rates, which in turn is deemed to be bad for business. It makes it more expensive to borrow money, both for businesses and for consumers, which generally then harms economic growth. So when inflation starts to get out of control, it does concern markets somewhat. So this is the UK Retail Prices Index, which has been rising quite sharply since the beginning of March, really. It did cool off a little bit in July going into August, so the sort of trend is starting to slow down, but it's a very substantial spike in inflation nonetheless. Where inflation is being felt even more profoundly is in the US, and inflation was running at 5.4% in the US in July. So clearly that's very, very much ahead of the bank's target inflation, which tends to be something between about 2 and 3%. And there's a bit of an argument going on about whether this is so-called transitory inflation. And what we mean by that is inflation is measured based on the same time last year. So of course, at the moment in 2021, we're measuring 12 months back into 2020, right in the middle of the lockdowns and the economic impact of the pandemic. So it's fair to assume that inflation will be up this year because we're comparing a very low base from 2020. So that's one argument as to why we're seeing inflation increase very sharply. And indeed, I think that probably is partly the case. The other issue, though, could be more structural. It's been widely reported we have significant supply chain issues, both in the UK and overseas. There's a very widely publicised shortage in computer chips, which is hurting vehicle production, it's hurting electronics production, and we're now hearing, supermarkets are struggling to get stock, toy retailers are concerned about their stock for Christmas because we have issues in the supply chain, and also now a very significant shortage of HGV drivers as well to get the stock into stores. So all of these issues, of course, are constraining supply, and that in turn could also increase inflation. And when you've got both of these factors going on simultaneously, it's quite difficult to know which is driving the numbers. So we need to keep a very close eye on that in the months and weeks ahead. Just a very quick update on our thoughts around the client event. You may have seen we ran a survey a few weeks ago just asking for client feedback on whether they would like us to do the in-person client event at the RAF Club or host something online as we did last year. We were hoping for some guidance in that respect. In actual fact, the survey result was almost precisely split down the middle. It was a dead heat effectively, so didn't really tell us a great deal. So what we're planning to do is actually deliver the best of both worlds. So we're planning to host a live event in central London for those people that want to attend, but also live stream the event so that people at home can watch online if that's your preference. So we may have to change the date. We'll have an update going out in the next week or so on this once we've firmed up the plans, because we now need to organise a separate company to come in to manage the live streaming technology. So more updates on the client event to come in the next week or so, but we are trying to deliver the best of both worlds so that everybody can have the experience that they're looking for. Finally, it's worth mentioning, this is breaking news, hot off the press. We've just received notification that HMRC are expecting to launch their trust registration system in the next week or so. Now, the trust registration system is the online system that HMRC has been working on to replace the old paper-based trust registration form, which was actually retired now back in 2017. And the online service was expected to come online only a few months later, and it's been delayed and delayed all the way through, and we're now approaching the end of 2021. So arguably it's about 4 years behind schedule, but apparently we are going to see the system launched in the next few days. Now, there will be a whole range of trusts that do require registration, even ones that have been set up historically. Once the system goes live, we're going to be doing a full analysis on all of our trust clients, all of the clients we've ever worked with their trust planning, and we'll be communicating individually with clients where they do have a requirement for registration, and we'll have a full service to support trustees in registering their trusts as well. So nothing to worry about. There'll be plenty of further communications coming from us in the next weeks and months, but we just need to wait for the system to go live. Of course, we need to get access to the system ourselves, have a look under the bonnet, and then we'll be communicating with clients in terms of any actions that are required. So that's everything for this update for August. We hope you've enjoyed this little whistle-stop tour of what's going on in the world of financial planning, and we'll see you again next month.